Now we are going to talk about the next step in the accounting cycle after we have already completed the accounting equation. Again, that's just so you understand the concepts. We've done the journal entries, means recorded the transactions into the actual accounting system, then done the T accounts to find the totals of each account. By the way, T accounts are usually made at the end of the accounting period, which is usually a year, or it can also be like every 6 months. But you understand, like at the end of the year, you create the T accounts so you can make the unadjusted trial balance, and then you can make the next one and the next one. So all of these things except the journal entries happen at the end of the year, or again at the end of the accounting period rather, because it can also be like 6 monthly accounting period or quarterly accounting period depending on the size of the business and everything like that. Okay, so the next step that we have to cover is called the adjusting entries. Now, just to give you a good understanding of this topic. Now, if there's any topic that there have been the most students that I've had, like always confused about, it is the adjusting entries. The reason I'm telling you this, so you understand the significance of this topic. Students say it doesn't make sense, but it makes, of course it makes sense. Like otherwise, why would it be into accounting, and why would accountants know how to do it, right? Of course it makes sense. So the problem usually is when people don't understand the adjusting entry, they probably don't understand some of the previous things, right? Maybe the rules of journal entries, debit and credit, they've not memorized correctly. Maybe they don't understand the effects of each account with certain transactions. So there is some other problem with their understanding, not that adjusting entries are actually that difficult. So just to give you that idea, please, for this topic, when we go through the material, please solve what I'm solving again and again and again. Just go through the concept again and again and again, just to make sure this topic is definitely dialed in, right? We know what we're doing here. So just a small discussion there based on experience, right? So don't treat this topic as every other topic, because this is where students get the most problems usually. So before anything about the adjusting entries, we do need to talk about some basic terms first, so we can understand what we do in the adjusting entries. Okay, so there's something called prepaid expense that you have to understand what that means. So prepaid expense is exactly what the name suggests. Prepaid expense means expense that is paid before it is used, right? Prepaid is paid beforehand. So any expense that is paid in advance. So usually in real life, insurance is a prepaid expense, right? Because of course we have to pay ahead of time. But obviously you can pay any expense ahead of time. You can pay rent ahead of time. You can pay salaries ahead of time. So it can arise from any situation. So you have to understand that prepaid expense is basically any expense that is paid in advance. But the problem comes when we talk about the type of account it is. Is it an expense account, asset account, liability account, equity account, or revenue account, which again you can say falls under equity, but yeah. So, and by the way, from now on, I will really encourage you to think of 5 categories separately. Just to tell you something from my experience, think of expense, assets, liabilities, equity, and revenue as separate categories, because it will really help you out in the later parts of accounting. So just trust me on that. Okay. Now, prepaid expense, what kind of account is that? So let's think about this. I have paid expense in advance. So is that my expense? No, because you have to understand that in accounting, we only record expenses when they've actually been used. So in this case, I've only paid the money. I haven't used the expense, right? So let me get you introduced to a certain concept. This is called accrual basis of accounting. So what does accrual basis of accounting mean? Please remember, nowadays we use accrual basis of accounting. It basically means that revenues should only be recorded when earned, means when you have done the work, and expenses should only be recorded when incurred means when you've used them, not when you pay the money. So if you notice, there's no mention about money. It's just revenue is recorded when you do the work, expenses are recorded when you use them. Why is this a great rule of doing accounting? Because this helps us keep everything so accurate, you know. So I only record something when it actually happens, rather than when I, you know, pay the money or receive the money, which is never, like, sometimes not the same at the same time. So hopefully that idea is clear, that nowadays we do accounting based on the principle that revenues should be recorded only when you've done the work, means earned, and expenses should only be recorded when you've used them. So, and by the way, that's what incurred word means, you've used them. Okay, so in this case, we of course haven't used the expense that we paid for. We paid for in advance. So think of it in this sense. So when you pay for an expense in advance, you are buying a benefit for the future that you own. Think about that again. Prepaid expense is a benefit you have purchased for the future that you own now. And what do we call anything that you own? An asset. I never said asset is anything physical that you own. I said asset is anything you own. So even if we own this benefit, it's an asset. So in this case, this is an asset account. So I hope you can see why students get like a little bit confused. They see the name, the word expense in the name, and they think, okay, it's an expense account. No. It's an asset account. Okay. Let's see how the normal journal entry looks like. Again, by the way, we're not doing the adjusting entry, just the normal journal entry. How will I record this transaction into my system when I pay for something in advance? So let's do it a little bit here. So let's say on 1st of January, paid rent expense for 6 months in advance of, let's say, how much money did we pay? Let's say $6,000. Why not? So on 1st of January, to make the entry, again we have to go to our concept, because if you know the concept, you will always know the entry. That's like, I hope that's established by now. So since I'm paying money, my cash will decrease, and since I'm buying up an asset, means a benefit for the future, my prepaid expense account will increase, because now I own this asset because of this transaction. Asset increase on the debit side, so prepaid expense will be debit. In this case, prepaid rent expense will be debit, and cash will be credit. Again, just applying the normal rules we already learned. So I'm building on that if you know the concept, you know the entry. It's never possible to know the entry and know the concept. So yeah, that's what a prepaid expense is, when you paid for an expense in advance. Okay. The second term I want you to get familiar with is something called unearned revenue. Now, what is unearned revenue? So unearned revenue is when customer has paid us the money, but we haven't done the work. That means customer has paid the money in advance, right? Customer has paid us as the business the money, but we have not provided the services or the sales that we're supposed to do yet. Now here we have to again ask the same question. What type of account is unearned revenue? So if I have received the money, but I haven't done the work, if I haven't done the work, I cannot actually say this is a revenue account, because revenue is only recorded when you do the work. So think of it this way. When you receive money, but you still have to do the work, this means you owe work to the customer, right? You still have to do the work for the customer. You owe the work. So anything we owe is called a liability. So it's, again, we are bringing everything together. So everything is logical. There's nothing in accounting that you should just memorize, other than, of course, the rules. Rules are like rules, right? You cannot like try to understand the rule. Again, if you want, you can, like, that's extra work for you, but it doesn't really add anything, at least in this case. Okay, so let's do the journal entry, how it looks like. Again, just to show you, it's very logical. So let's say, again, on 1st of January, for some reason, I always write 1st of January. Everything seems to happen on 1st of January. So let's say on 1st of January, customer paid $10,000 cash in advance for next 15 month service. So now, okay, let's think about the concept first. Since I'm receiving the money, my cash will increase, of course. And since I haven't done the work, I cannot record the revenue, but I can record unearned revenue account increase, which is a liability account. It's not a revenue account, it's a liability account. So cash is an asset, it increases on debit. So that part I'm assuming is clear by now why the cash is debit. And unearned revenue, it's a liability, so it will increase on the credit side. The better you understand the rules, you try to memorize the rules at home, the better it will be. Again, I will give you the same warning I gave you at the start of the course. Don't use the acronym way of memorizing the rules. Please, it's not worth it in the long run. Memorize them as a normal, anything normal that we memorize, right? We don't try to use shortcuts unless, again, we're trying to be over efficient and do that. But I hope you get the point. So that's the journal entry. Again, we're just learning the normal journal entries of these different concepts. Okay. So once we have covered the prepaid expense and unearned revenue concept, we have the third thing to talk about, something called accrued expense. And just to make you ready, like we have to just talk about 4 of these different concepts. We have already covered 2. This is the third one, and then we'll do one more after this. So accrued expense is exact opposite of a prepaid expense. In prepaid expense, we have paid money, but we haven't used the expense. Here, we have incurred the expense, means used the expense, but we have not paid the money. So let's think about it. If I've used the expense and I haven't paid the money, that means I owe the money. And when you owe money, it's always a liability account. So, yeah, just remember, accrued expense is a liability account since we still have to pay the money for the expense we already incurred. So what does the entry look like? So let me give you an example. So let's say by 31st of December, incurred rent expense of $5,000, means let's say we lived in the building for that month, but we have not paid the money yet. Okay. So of course, one thing is clear. I have used the expense, and the rule of accrual basis of accounting was expenses should be recorded when they've been used. So in this case, one thing is a no-brainer. My rent expense will go up. That always has to be a, always will be the case, right? There's no exception to this. When you use the expense, you record expense. The question is, what is the other account that will be affected? So let's think about this logically. I haven't paid the money. Now, just to let you know, if you're thinking accrued rent expense, you are correct. We can call it that, right? We can say accrued rent expense increase, which is a liability account. This is the correct way to do this. This is not wrong. But if you are doing accounting in a, let's say, US or Canada, you are supposed to write rent payable rather than accrued rent. The reason is just, again, when you say accrued rent, most people would not know what that means, right? So we are trying to use a name that's like more acceptable, more understandable for most people. So rather than saying accrued rent expense increase, we will say, again, by the way, accrued rent expense increase is the correct thing to say. You can make the entry with that. It's accepted all over the world, except again in the US and Canada, usually they say use the one rent payable to suggest what's actually going on in an easier way. So I hope you get the point. It's not a necessity to do it this way unless you are in US or Canada. So rent expense will be debit because we know expense increases on debit, and rent payable, which is a liability, will increase on credit. So yeah, I hope you got the point why I'm not using the accrued expense name, which is completely fine. You can use it, but rent payable is for usually when you are in the US, and again I keep saying the same thing. So I hope you get the point. All right. The last concept that I need you to understand before we get to the actual adjusting entries is something called accrued revenue. Now, accrued revenue is opposite of unearned revenue, just like accrued expense is opposite of prepaid expense. So in unearned revenue, customer has paid money, but we have not done the work. Here, we have done the work, we have provided the service or the sale, but we have not received the money yet. So this is kind of like what we have already done in a way. So I will show you what I mean by this. So if I say by 31st December, provided, let's say we provided accounting services of $10,000, but we have not received the money yet. This is something we have already done, where we said, do you remember? We said, because we have done the work, our revenue will increase, service revenue will increase, and since I'm still owed the money, my accounts receivable will increase because I'm owed more money because of this transaction. So accounts receivable debit, service revenue credit, this is what we already covered in the past classes, but at least now we have a name to give this type of transaction, accrued revenue. And that's it for all of the basic, let's say, concepts I wanted you to know before going to the adjusting entries. Just in case you're wondering what is accrued revenue, what type of account is accrued revenue, it's an asset account because that's what accounts receivable is, right? It's the amount we are supposed to receive in the future. And again, you can use accrued revenue word in every other country other than US and Canada. There you use, probably you should use accounts receivable, so it's more acceptable to the, let's say, understandable for most people. Again, there you go. Done. I'll see you in the next video. We'll continue with the adjusting entries, and hopefully you'll see why people find it so confusing. You've already seen most of it, like these concepts. When you don't understand these concepts well, the next part we are about to cover obviously becomes quite difficult.